Alrighty. I think we're back. Anyway, you guys are watching the live stream replay. This is take two. This is take two. Alrighty. Take two in the markets. Is that yeah. Hi. Pav. Alrighty. Let me start off with okay, so this is the continuation of the first live stream I was doing a minute ago. If you didn't see it, I'm going to quickly recap what I was talking about before. And then we'll continue with hopefully hopefully my live stream, the live stream is good from now on. So hello everybody. Let's go. Let me obviously start off with typical disclaimer, guys. Make sure you, no matter what trade, no matter what if I talk about a stock today or something like that, it's not me recommending it. I'm going to be talking about different things that I'm seeing right now in the markets. Two individual stocks I'm seeing right now, and everything else that's happening right now. But there's no guarantees of making a profit in the markets there. Also, make sure you go get access to this book, johnsfreegift.com, that I've put together. But it's on my 20 years of experience and on the backs of Jesse Livermore, WD Gann, like these really, really successful traders. And if you're looking for a good trading system, guys, I've put together my top 5 trading systems I've used for the last 20 years. And I'm doing a bit of a flash sale for only $4. So make sure you go get access to that, johnsflashsale.com. Now, we've got all that out of the way. Let me show you this here. So what I was talking about, let's actually go, I'll go back to this one here. So what I was talking about in the first live stream was about what's happening right now in the stock market now and what's happening with the indices here. And one of the things that I was talking about was how I believe that we could be getting ready for this week. It could be the week it really breaks out and we start to make another really big move. Because if you look at the actual stock market itself here, the stock market, if you look at it from a whole of, if you just look at what the market's been doing here, the market really hasn't been doing much for the last, since the middle of September here. So if you look at the different phases we go through, we've gone through this really big acceleration phase through here. And now we've gone through what's this, just a consolidation phase. I call this an energy building phase. This is building energy to go for another really big move to the upside. And once it actually breaks, which it looks like we're trying to do it this week here, once we actually break all this energy that's being built up, because it's just been going sideways. This is just resting, refueling, getting ready for another move to the upside. All of this refueling that we're seeing right now that's what the market does, right? You go through these pullbacks, these swings, and a lot of the times, like the best patterns that I like to see, the best chart that I like to see, this is the S&P 500 chart. The best chart that I like to see, well, if you see a big bull market, right, you normally get up and then you get a bit of a pullback, and then you get up and then you might get a bit of sideways pattern and then you get up. So with this market going sideways through here, to me, this is the market resting and refueling to go for another move. And I call these phases, especially when we go through these sideways phases, I call these energy building phases. Now, once the market starts, once the train leaves the station, right? The train's been at the station for quite a bit of time now, okay? The train's been here for quite a bit of time, just resting, refueling, and so on and so forth. Once the train starts to leave the station, all this energy here that's been built up for it just resting and not doing anything, just going up and down sideways, all this energy is going to be released. It's been, the market went up through all here for 5 months. Really nice move for 5 months. Then we went sideways here for another, since September, especially October. This has been building in a lot of energy. That's what the market's been doing this last couple months here, which the market stops for a little bit and then everyone's calling a top. So once we start to break out from here like that, this whole thing through here is called one big energy building phase. The market's actually been building energy here. And once it actually breaks, all this energy that's been built all through here is going to be, and when it starts to break through here, it's going to be releasing it. So I wouldn't be too surprised. Once we start to break above 7,000, I wouldn't be too surprised if we quickly saw within a few months, 8,000, 8,500, pretty quickly. Because all this energy, all this here, market going sideways, is energy being built. And then boom, the way we go again, right? And you see this here, and this is what markets do. Once you understand these different phases in the market, like if you go look at, I'll show you, I've talked about this before, but if you go look at gold, you will see how these phases in the markets, this is what the markets do, right? They go through these, what's called different phases in the market. So we go through a nice up phase for a while, then we go through a resting phase and an up phase, and then a sideways up, and then go sideways, up, sideways, up, and so on and so forth, right? This is what a big bull market does. This is what markets do, right? And the market will go up for a while, but then it'll go through what's called these energy building phases, where the market won't do much for a few months. It'll just pause. It won't drop hard, but it'll just pause. It's building energy to go for another move. And then boom, we go for another move for a few months. Then we have a couple of months, 2-3 months of sideways, building the energy again to go for the next move. And then we go for another move here for 2-3 months. And this one here was actually sideways for 4 months. It's not a reversal. It's not a crash. Nothing like that. It's just pausing to build energy again. And then it releases the energy, right? Same thing through here as well too. So you'll notice that this is what markets do, right? And they will go for a while. They use the energy to the market starts to move in acceleration phase. It's called a price phase. I've learned this from WD Gann. But once you start to understand the different phases we're in right now and what the phase we're in right now is likely to be, then you understand this. And in a very big bull market environment, just like gold's been doing for the last 2 years, it'll go for a couple of months, sometimes longer, right? But then there's got to come a point in time when the market's going to get tired and it needs a bit of resting and needs to refuel again. And then it'll stop and it'll be volatile, but it won't drop hard. It'll be volatile, but it won't drop hard. This is building energy to go for the next move. And then bam, we go for another move here, right? And we go for another move here, and we go for another move here. So when we're looking at these markets here, I'm always looking at this from the phase of what sort of phase are we in? Are we in this, what's called a price phase where the market's accelerating? Or are we in this, what's called a time phase, or what I call it an energy building phase? Because the time phase is where the market's resting. It's resting, it's just building up some time. It's getting ready to go for another move. So when we look at, say, the S&P 500, right? And I'll show you this here. Firstly, we just had 5 months of just really big bull market through here. That's a lot of movement there. 5 months of just acceleration. Was it 5 months? Let's go through. I think so. Right. I think it was 5 months. Anyway. Yeah. So I think it's 5 months. So if you think about why is the market doing what it's doing now? Well, it's doing what it's doing now because the time phase is where the market's resting. It's resting, it's just building up some time. It's getting ready to go for another move. So when we're looking at, say, the S&P 500, right? And I'll show you this here. Firstly, we just had 5 months of just really big bull market through here. That's a lot of movement there. 5 months of just acceleration. Was it 5 months? Let's go through. Right. I think it was 5 months. Anyway. Yeah. So I think it's 5 months. So if you think about why is the market doing what it's doing now? Well, it's doing what it's doing now It just spent 5 months going up with very little. We've got these pullbacks, but very little pullbacks. So if the market has spent all of these 5 months going up, and think about the market like an energy source, right? This is what's called price. It's called using energy, right? The market's buying it up and buying it up and buying it up and buying. There's got to come a point in time when the market needs to needs to stop for a bit, right? It needs to refuel for a bit. It needs to rest for a little bit. All right. And I know this sounds really weird. Like, what's the stock market? Stock market doesn't need to rest. Like, just look at what I just mentioned just a few minutes ago with gold, right? These markets go through these different phases. And so when the market's done this here, all this is now, it's not a surprise after 5 months, we've now done 3 months of just really nothing here. Just really nothing. Why? Because it's spent 5 months going up. So now it's just need a couple of months at least, right? Of just resting, refueling, not much going on. And it's through this time here, people start to get nervous and people start to call the top, and then they look at their heads and shoulders and all that sort of stuff. So to me, all this is just another one of those energy building phases. We used a lot of energy here, so we needed to refuel again. Then when we start to break out through here, we're now starting to release all this energy that we've been building up here. And when we do, we're probably likely to see 8,000 or something like that, I would say. That's a guess. It's a guess. But when we start to break out, that's when the acceleration starts again. And this sideways chop that we've been seeing for the last 3 months is over. We're now starting the acceleration phase again. We're now exiting this here. And then we have another big acceleration phase. Because that's what markets do, right? And again, this is why I love gold from a teaching perspective, because it allows me to show you, like, this is the gold chart here. And I love teaching this from a teaching perspective, right? Because the market will do this here. It'll go up and it'll go sideways. And it'll go up. But see this here? Look at this here. This sideways is volatile. And then it goes up for a while. And then it goes volatile for a while. And then it goes up. But look at this here. It went sideways and it was volatile. And then it went up again. So we go through these phases in the market. Right? We go through these different phases in the markets. And the phase that we're in gives us a guidance on what's going on right now, 1. 2, what could be coming up. And because we've been in a very big bull market and we're just going sideways through here, it says that we're in that resting, refueling phase. And when we start to break out, we're now likely to be starting that next acceleration phase. And as you can see here, right? Break, acceleration, break, acceleration, break, acceleration. And you go through these, and gold has just been perfect for that for this last 2 years. So once you understand the different phases these markets go through, you start to understand, and you understand what's going on here. And so what's going on right now on the stock market, as you can see, is that going to do it? It is. Yeah. What you can see happening here on the stock market now is what? Very simple. A very big acceleration phase through here for about 5 months. Then now it's gone through another one of those phases again, which is what? Sideways, just not much going on. Another one of those patterns, building the energy again. And then when we break, we're now likely to be starting that next acceleration phase. And then up we go again. So the beauty thing about these patterns here, it gives me a high probability of 1, what's likely to be coming next, and 2, it tells me that whether it's likely to be an acceleration phase or a resting phase. And whenever you go through these resting phases here, market's just resting. That's it. The market is just resting. And so this is where, like, a lot of these charts here are going through these different phases. And it's the number one thing you can utilize to help you spot, identify, one, what's really going on, and two, the high probability of what's coming next. And a high probability of what's coming next is simply this: very strong upward trend here, very strong upward trend. Then the upward trend just had a pause for a bit. It needs to refuel. Now that when the refueling's over and we start to break out, we're now likely to be leaving the refueling phase and now likely to be starting to use that energy that it built here, and it's now likely to be releasing that energy. We're likely to start to see the next move up. Using energy, then we need to rest for a few months or so just to build the energy up, let it rest. And then when it breaks, we're now likely to be using that energy, and then we go through another acceleration phase. Different phases in the markets here. That's what you should be looking at with the markets. What most people are doing right now, it's a heads and shoulders, John. It's the divergence on stochastics, all this other crap out there, and then the market's still making a new high. They're looking at the double tops and the heads and shoulders and the divergence on the MACD and the stochastics, yet the market still just made another new high just recently. Don't go with the market. And so right now, guys, and that's why, like, I really mean it, it could start this week. We could be starting that next acceleration phase this week. It could be the startup. And you see the YM. It's amazing, isn't it? Right. YM setting up is nice as well too. Nasdaq's been doing the exact same thing. I don't see why people are calling top four. It had this very big move to the upside. Now we've been doing nothing here for a while. If this is right, guys, if the market does start to break up above here and we start to make a move up like that this week or coming next week, depending on where you are across the universe, acceleration phase begins, and then boom, 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 boom. Expect a really, really, really nice move to the upside. And I reckon it's going to be pretty quick. And that's why, like, I recommended that a few months, we're probably going to see 8,500 on the S&P if we do start the breakout, right? But what I want to see for confirmation of that starting is this. We're now making higher lows here. Low, higher low, and a higher low. I want to see this thing pick back up and break above previous highs. If we get that, this point through here, this is a higher high, higher low, now breaking up through here. This point right here will tell me now this is now confirmation that we have a high probability, no certainties, in the next acceleration phase. And then boom, 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 away we go. And then, yeah. So, and again, when we start to break above 7,000, if that happens this week, I wouldn't be too surprised to see probably by February, March, we see 8,500 on the S&P. So, but again, guys, don't go place a trade based on what I just said there. I can be wrong. Right? So there's always a risk to the markets. And that's what the markets do, guys, right? That's what even right now on a short-term level basis, look what the Russell's doing. All right, we had this nice pullback through here. Well, I call it this is actually a big slingshot pattern, but I'll get to that in just a minute. But look what's happening here on a short-term level basis, right? We've gone up through here. Now we're just going sideways. If the Russell starts to pick back up through there, what do you think that is? Ha! Away we... And then away we go again, right? It's actually quite a simple process. And as you can see, guys, like the way that I view these markets, I keep it really simple, right? Because this is what, once you start to understand the markets on a deepest level and not a derivative like a stochastic or like that sort of stuff, and you understand the power of these momentums and trends and so on and so forth, you start to get, again, guys, like to me, I'm going to have a really good year this year. My foundation of how I know I'm going to have that is because I know most of the time I'm going to be right. I mean, I'm going to make a profit, and sometimes I'm not. But most of the time I am. And then there's going to be a good portion of those, or a good portion of those winning trades that are going to be really big profit trades. Why? because I'm going with the market, and most of the time the market continues. So the foundation of I know I'm going to have a really good year this year. And plus, I simply just continue to trade the same trading approach every single time. I'm trading with the overall momentum and the trend of the markets, which means we're the big boys, right? Think about the trend and momentum in the market of what the big boys are thinking and feeling. If the market's making higher lows, that's an upward trend. No, John, tell me something new. Okay, well, if that's the case, the big boys are actually in an upward trend. Go with the big boys. Don't fight them. They're going to run you over. They're going to run you over. What most people don't consider is that half of any trade is the value of the USD as it falls on balance. Everything goes up. Okay. What does that matter? If I put on a trade today and I make $10,000 today, I still can take that $10,000 and go buy something with it. So who cares about the fall of the US dollar? Looking at the measure move. Looking for a measure move in the S&P. Yes, there could be a measured move, and the measured move is well, there's a big long-term measured move that if we do start to see this thing evacuate, then that 8,000, possibly even up to 8,500, could start to come into play. And so what that would look like on an overall, let me actually just squeeze this up here. What that would look like then, it would look like something like this here. We're now going through what? This is the energy building phase. And then we start to see this thing accelerate probably up to there somewhere. Now, that's an overall basis, guys. That's not just what the market's going to do, right? It's not going to go straight up every single day. We might go up for a couple of weeks and then maybe pause for a week or two and then just be realistic about what I'm doing there, right? Some people see the line like, John, but you said it's going to... No, I'm just drawing an overall basis there, right? And if you really want to be pedantic, where did I draw that line? This is now July next year. So if you want to be... I don't expect that to happen, but if we do break out, I expect the first quarter to be very strong. I expect then probably then by March, and again, I could be wrong, to see the 8,500 level. January, February, March, or probably April, I would say, if I'm being a conservative there. So yeah, the measured move there on an overall basis is that 8,500, and then it may overshoot that as well. And the NASDAQ as well. Same thing for the NASDAQ, right? The NASDAQ's just, look at that. Look at this. This is just beautiful. Major resistance is now becoming support, holding through here. We're about to see some really big moves, guys. I'll tell you right now. Again, I can be wrong. I'm in the market already, by the way, with good risk management on my account, not loading up 100% of my account. If you're thinking about doing that, you're a moron and you're going to lose a lot of money. Don't do that, right? There's a risk to every single trade here. All right. So I'm already in the S&P. I was a month ago. I'm in it right now. And I'm already up about 20-30% on my position right now. So I'm in call options on the SPY if you guys really want to know what I'm doing there. And the same for if we look at it, say a measured move, right? A rough measured move. A measured move is not where it's going to 100% go to, and it doesn't mean it's going to stop there, by the way. Right, but a rough area for where it's likely to go to, I would say that this area up here somewhere, that's a measured move from there to there. Now, one, doesn't mean it's going to get there, and two, doesn't mean it's going to stop there, right? I've seen so many times where I've had the measured move, and it'll go through there, and it'll just keep going. It's like, hang on a minute, what happened there? So I use this just as a rough gauge of where the overall sort of magnet, I would say, it's probably around this level here. on that move there. And the measured move for the Russell is up there around this area up here somewhere. So that's the line coming up through there, which is the new upward trend we just broke out. If the Russell does hold here and we push back up to another side, push back to the other side, that's another low, higher low. And if you actually look at the Russell's actually got a beautiful, beautiful pattern, right? Look at this here. Comes up, down, higher low, comes down. If the market holds here this week and we start to pick back up, what's that? Another higher low. Buyers in control. And then we start to make our way back up to right around the 3,000 level. A target is this box up here, which is the top of the channel. And that's also a measured move as well too from that point there. And you project that up, that gets you right about that 3,000 level there. So the Russell, again, guys, one thing that I've learned through my 20 years of trading in the markets experience is one thing I've learned is that I need to keep listening to what the market's doing and not what I want it to do. Even though I'm long the markets, I need to be having a warning sign that my trade is wrong and I need to get out. So I'm not one bias one way. I'm looking at the most important thing for me is the trend. Where is the trend? Because the trend is what the big boys are thinking and feeling. And if the trend is still up, the big boys are still buying it up. So if the market goes up and then we have a pullback and then it comes back up and we have a pullback and goes up and we have another pullback and we goes up and we have a pullback. If this is the case, then the big boys are still buying it up, even with these pullbacks. So I want to be going with the big boys, not against them, because the big boys will eat you for lunch, which they do. They eat most traders for lunch, and that's where most traders. Unfortunately, I know. Like I spoke to one trader just recently, and he had a $150,000 trading account. He got lucky on a few trades. He took that to $500,000. And then by the end of the year, he was back down to break even and he lost all of that. Talk about swings, right? I know a lot of traders are losing a lot of money last year because of the swings and the volatility and so on and so forth. And so my goal is just to try to help you guys. I'm helping you, guide you down the path of what helped me finally get into some really good winning, consistent winning streaks, or consistent winning streaks of years, not months and just weeks and getting lucky every now and then. But how have I set myself up? How did I finally tap into having successful years in a row, not just being lucky, once a week or a month, but how did I finally tap into the code of every year I'm going to have a good year because I'm setting up my life with these principles of the stuff that I'm talking about here, the stuff that I talk about in my book, which is the johnsfreegift.com, which that's the free book I'm giving away, and even the trading system I'm using, which is johnsflashsale.com. That's the $4 flash sale I'm running right now. So even that sort of stuff through there, right? I'm just trying to teach you that for there. Sunshine Girl firstly, welcome. Did you sort of get, I just read your comment. Did you sort of get what I was looking at there? And what I was going through there? I'm not sure when you actually put that comment in, but, so most of the indices, what I was talking about there, were just we're looking at the Russell right now. What's this here, Kendi? Who's putting out this info about Venezuela? Measure move in silver, $95, but it always overshoots, which will be $100. Actually, let's go look at silver then. Let's go look at silver. Now you are right here, by the way. Like, I believe silver could have one more move in the upside. I believe both markets here, by the way. I think gold and silver have one more move, and then whoever's in those markets, get ready for a really like a real big correction. Like we're talking a hard on. By the way, guys, FYI, I'm an investor in gold and silver. I'm going to put that out there, right? I've been investing in gold and silver for 5 years. Since 2020, I started building an investment portfolio around silver, gold, and the mining sector. So when I say we're about to see a really big correction in the next 12 months, a 30+% correction in gold, probably a lot more in silver. Caveat out there, I'm long right now, right? From an investment point of view. So, and the only way you say that is this, is that if that does happen, just look at what these markets, look at what silver does especially, right? We just need, if silver does, which I think we do here, we have one more push to the upside here. If it does hold here for a little bit, for maybe for a couple of weeks, maybe a month, and we have one more push to the upside, look at this here. Every time in history, we get these hard and fast snapbacks. And then that's when we start to get something like that through there. So if you are left hanging in the bag, if you're an investor in gold and silver, understand that. And also, if you are a trader and you're seeing these things and you're getting FOMO, just understand what's coming down the road as well too, right? That's the whole big thing about just being smart about what's likely to come down the road from there. So yeah, I also do believe as well too, just by looking at this level here, if I bring on my 52 moving average, which that's the moving average I like to use on my daily charts, because it gives me a good gauge on where momentum is. So we can see, just opening up this chart now, we can see where we're at right now. Is this going to do it for me? Oh, there we go. Cool. Right. So we can see through here. So we may have a bit more of a pause through here. I'm just trying to get. So we have this 52 here. This is the 52 coming up through here. So we might get that. And then we may get something like this here. Or should I say, if we did get this pattern here, like this here, I'll be so excited because that'll give me a good trading opportunity. Now, investments is I'm buy and hold for like 5+ years, right? I have an investment portfolio of gold, silver, mining stocks that I'll be looking to exit in the early 2030s. Gold 10,000 plus, mining stocks all-time new highs, GDXJ, so on and so forth, right? That's the way I'm thinking about it. Who cares what's going to happen in the next 12 months? Yes, we're going to see a real big crash in the stock market, in the mining sector and gold and silver, right? That's going to happen after this bull market's over. We know that. Who cares? From a trading purposes, meaning like, SLV options for a couple of weeks to a couple of months, we start to get a breakout. That's going to provide a really good opportunity where I can hold it for a couple of weeks, couple of months, and generate a couple of 100% return, maybe more, on an option. So I'm always looking at it from two sides of point of view, right? I have my long-term investment portfolio, but then, I'm also an active trader where I'm looking for these opportunities so I can pull money out and pay my taxes and live off, which I do. So I'll be very excited if we got something like that because that'll be like, here we go again. So bring it on. Bring it on. Just give me a sec, guys. All right. I'm back from outer space. So that's what I see happening there. Now, actually, let me talk about a few stocks here, guys, that I think are quite exciting. A few stocks that I see that are quite exciting right now. Yeah. Yeah, down to 50. Ken? I actually hope not, by the way. I hope not. Because again, like I actually hope we actually just get a sideways pattern here for the next couple of weeks out of the market here. It's out of silver here, because then that'll provide another really good opportunity to have a good trade. That could last a couple of weeks, maybe another couple of months. My 1% group that I have, which it's actually closed right now. My 1% group, by the way, if you guys want to know what the 1% group, I have a group that I take on a small coaching group every single year. And it's around 15, maybe 20 people if I allow some extra people in there. Right now there's about 15 people that have accepted into it, and it's closed down now, so it's not me opening it. But basically the 1% group is that you're with me every day through these markets, and I'm coaching you and guiding you, and you're part of a small tight group for a whole year with me, where I coach you through all these different markets and understanding them in different phases and education and looking at the trades I'm in and all that sort of stuff as well. So I call it the 1% group because I'm very fortunate to the results that I achieve. Is part of what's called the 1% of society, especially in the trading. And then my goal is to help people get onto the right thinking, right mindset strategies. And that's some people have been asking about, like, what's the 1% group? That's what it is there. So it's called, I call it the 1% group because of that. And again, it's not me marketing it, by the way. I don't actually have it open right now. I've had most of my coaching clients who were with me last year, they did so well that they took up like most of the spots for next year. So I only had a couple of spots open. I opened it up before, and then and now it's actually closed down. So, which is a good, right? About 80% of the spots that I had open was taken up from the people that were with me because they did so well this year or last year that they automatically re-signed up again for another year with me. So bit FYI around that. Again, but I don't have any coaching programs. I've got nothing really to offer you apart from that $4 sale that I'm running right now, which is the trading systems, just to help you guys out. Commodities, energy, and defense stocks should do well. Yeah, well, the energy sector, Sunshine Girl, as you probably remember, especially over the last couple of weeks, I've been really big on just what I'm seeing in the markets. I see the energy sector being the next market to have quite big moves. Good for gold too. Hope so. Anyway, I love my metals. Yeah. Just be prepared, Sunshine. All right. Just be prepared. As I said before, you might love your metals, but don't be so emotional when we do start to see that really big correction that's going to come down the road in the next 1 or 2 years. We're going to see a really big, healthy correction. And this, like, if I talk about this here, and I'll show you this is actually gold here. Even gold did this last time as well, meaning you can see we have this very big bull market through here for a couple of years, and then eventually we get a very big correction. And most of the time it's down to around about that 50% level. Now, I'm not expecting this to happen. That's last out there. But even this very last big bull market we had from point through there to there, right? You can see what ended up happening, right? So that point there. Right? Or we could just do the ultimate low to ultimate high point up there. Right, but that's where it started. So the market had this very big bull market here for 2 years. And as you can see, eventually had this very big correction down to 30%, made its way down to the 50% level. And then we started to see this very big bull market. So in each of these very big bull markets, you see it back here as well. Right, in each of these very big bull markets, this one here had a 25% correction. This next very big bull market had this big correction. So there's going to be a time where the fun and games have been that most people are experiencing for the last 2 years out of the metals are going to come to an end, and you're going to see some big corrections. And so that means, let's say, for example, we actually get to 5,000. If I go from the ultimate low point to the ultimate high point to 5,000, that means if we did get to 5,000 and then we stopped and then we had a drop, you're probably going to get a probably 25, probably even a 30% correction out of it back down to that 3,500 level, maybe even lower. Ow. So, and that's all. The thing for me about trading is, one, how do I see good opportunities? But two, I'm trying to see the reality of the situation so I can just be prepared for what's coming. So when that does happen, I'm not like, oh my goodness. And yeah. Bitcoin, eh? Yeah. Bitcoin, not for me. I don't understand it. I'm not sure how people can invest in Bitcoin. If you are investing in Bitcoin, Sunshine, I want to know why you'll be thinking about doing that. For me, I don't understand it. If you're in the metals, then I think buy and hold for metals is really good. That's what my investment portfolio is around anyway. Investment portfolio is gold, silver, the mining sector for long-term buy and hold. That makes sense to me with the next inflationary spike and the printing of money. Like I see that there, but Bitcoin, I know. I think the cryptocurrency is it's a big dangerous pool that could get a lot more worse. So, you buy mine. So I'm guessing one thing I was talking about yesterday, Sunshine, was obviously BHP and Rio, obviously the big two here in Australia. I'm guessing you own those as well, because they're probably the biggest ones in Australia, Rio Tinto and BHP. Which my mentor, when I first started trading, told me never to trade those because they're so volatile and they gap up easy. You've been buying small caps. Okay, cool. Now, one market that I've been watching for is Netflix. Check out this here. To me, what's happening here with Netflix, guys, I think if Netflix continues to see a bit more selling period, as you can see, my weekly chart to the left, this is my weekly chart to the left here. What is that? This is the weekly chart to the left, and this is the daily chart to the right. I want to show you this from an overall perspective here. So as we come down through to here, one thing I'm expecting on a big picture here is we're having a really big drop down to here, right? We're having this big drop. If we come back down to this level through here somewhere, there could be at least a buying opportunity coming back up to that level there. So that means here we come back down to here somewhere, maybe find a bit of a bottom, and we probably should get it. And there's a good chance that we're likely to get a nice, good rally out of that level from there, which could be around about, that could be a nice, good 50 or so % move back up towards that level there. And then if it's going to peak out, it'll peak out through there. But Netflix, with that big drop it's seen so far, looks like a really good sort of a swinging opportunity that could be coming real soon. From that perspective there. And then the other stock that I'm looking at right now is Baba. Baba's looking really good. Baba, where's Baba? Right here. So Baba today, Baba with this very big, this is the weekly chart here. And so if I just open up this chart here, looking at Baba's in this very big, beautiful, just a beautiful swinging motion here. We went up and then we had this pullback for a while. And then we went up and then we had this pullback for a while. And we're probably likely to start to see this thing, start to see a very nice move on the upside. So they are two stocks that I'm watching, keep an eye on for right now, because I think there could be some really good opportunities around those two different stocks. And Baba may be already triggering right now, as we had this nice little down, and it's gone up from there. But this is the big swings there. So I'm expecting another big buying leg coming out of Baba real soon. Baba. What about NOC? NOC. Let's go look at NOC. I know you mentioned that before on the other stream as well. Is it this one here? Closed? I think it's NOC. Let me see if this. Yes, this is the this is the one here. Oh. Yes. Nothing for me. Nothing for me. And the only reason why is because if I'm looking at the actual daily charts, I'm not sure what's going on here though. Like we came up, we made a high low, now we made a lower low, then we're rallying up through here. I'm not getting a clear. So for me anyway, the way that I want to trade when there's a clear trend in place, clear high lows and so on and so forth. That's where if you look at you look at the stock market now. Oh, all right, we've got a clear low, high low, and a high low from there. So, so by looking at the NOC, again, I'm not sure. There's a lot of doubt there for me personally. So there's no trade for me here because there's not enough probability for me to take the trade. And then then even looking at like this here. I can see how it broke out of that level there. Now it's holding through here. So, okay, so here's what I see. So I see that through there. it wouldn't be a trading opportunity for me. But if we did continue up to start the break up through there, then we're probably likely to see a nice move up from here. That's me having a guess. I'm just not sure with this overall pattern here. It's not enough for me to take a trade because I'm just not. There's no trend here. Like I'm not sure. There's no upward trend. There's no. Yeah. Because it's too far from the moving average on the monthly chart. No, I'm not sure why you'd be looking at a monthly chart for this type of thing. If you're looking for a good trading opportunity, then I'm not sure what the monthly chart's got to do with it. No, not the monthly chart. I'm not looking at the monthly chart here. If you're looking for a good trading opportunity, then look at the weekly charts, look at the daily charts, not the monthly charts. Monthly charts are more, I use the monthly charts to show me what could be coming up over the next couple of years. Not, it's too extended and not nothing like that, no. I'm always using monthly charts to see where's that next very big bull market that could be starting. High lows, high highs, and that's the energy sector and all that sort of stuff. That's what I use the monthly charts for a big picture perspective, where we are in the cycle of things and so on and so forth, not what right now. It's, for me, rule number one for me is trend analysis. Meaning I want to make sure I'm trading with, if the big boys are clearly showing me they're in control, meaning they're buying it up, then that's called strong trend. Therefore, I want to be going with the big boys. I want to be going with the momentum of the big boys, what they're doing right now. Right here, I don't know what the big boys are doing. I'm not too sure. So therefore, it'd be me having a big guess there. So that'll be that through there, yeah. As mentioned, this one meets your rules setting up now. Years of sideways action, DJT, Dow Jones Transportation Average. Yes. I got that on my TC2000 platform. The IYT actually is better. Yeah, the IYT is actually better. So I could see what you're looking at there. The reason why the IYT, the ETF, is better is because it's already broken out of here and it's just going sideways. This is the big weekly chart here. Very beautiful upward trend here. Let me see if I can move this over here so I can get some context here. Let me bring on this one here and this one here. So what we're seeing right now is we're seeing this here. You can see here that the transports, especially the IYT, is a much nicer pattern for me than the DJT. So yes, I was looking at, on my TC2000 platform, I was looking at this actually. Yes, and you're exactly right. So now you can see, look at this here, sideways all through here. We broke up all-time new highs up here. If you look at the weekly chart, we're in a very big, beautiful upward trend. So low and another higher low. Now we've gone sideways. All through here, we've gone up. Now we're going sideways through here. So if we get something like that going on, like a big breakout bar here, especially coming off, this is my 24 on the, sometimes I use the 24 on the daily charts. The best one is the 50, but sometimes you will get that. But looking at this level here, if we do get, let me move this down to here for a bit. Just trying to make sure this sized up just quite nicely so I can just show you guys. If we got something like this and then we got something like this, like something like that going on, like a big breakout bar, and especially if that met with some big volume, then that would tell me now that we have this sideways pattern through here that's been doing this ever since July. This sideways is breaking out. Now we're probably starting to the upside. So, yes, DJT is not giving me a nice setup. So I wouldn't be looking at that. It'd be more like the IYT. And this is actually on my watch list of things that I've been watching for, plus many other things as well. So definitely. And the thing I like about this is we're in a very strong upward trend, as you can see. Beautiful up and then higher lows and high, like away we go. And then coming up the back here, we've actually done nothing since July. So we basically had 6 months here, 6 months of doing absolutely nothing. This is 6 months. Now we're breaking out here. This is likely to be the start of a new upward trend. So this actually has the potential of being the start of a new move that could give us at least a couple of months of a nice upward movement, I would say. But for me, now this is it here, but I need to see the trigger to tell me we're now likely to be starting that next move. Not now. And that trigger is, once again, the up bar. If I get a strong up bar like this here, that pattern there, especially breaking above there, that pattern there now gives me, if I just open up the daily charts a lot more, now gives me the probability that we are likely to do, we might get a little bit down bar here, a little something like that, and then we continue up and we get to something like that, and then we continue up from there. But this breakout bar here gives me a high probability now the next move is now likely to be starting. So I've got the setup here, one, yes. But then when I get the breakout bar, that gives me confirmation that if the move's going to start, it's starting now. And then we typically get the move after that. So I always wait for the setup one, and then I always wait for the breakout bar, because the breakout bar, because I know there's a high probability we're now likely to be starting that next move, right? And we go up and we go down and we go up through there, right? That's the overall pattern there. So I'm always, the one is the setup, which is the L-shaped trading pattern. The second thing is, okay, if we are, I'm looking for that next move up. I don't want to get in now because it may not, and we could actually do something like that, and then it doesn't confirm. So you never want to get in early, because it doesn't mean it's definitely going to go up. To give me a high probability it's going to then start to make that next leg on the upside, is I need to wait for the market to tell me, okay, now we're getting ready to go again. And then that's what happens. We break out and we get going to the upside there. So as you can tell, I've already done a lot of analysis myself behind the scenes. And again, this is one of the many stocks on my watch list that I've got, that I'm watching myself for a good trading opportunity. Or one of the markets there anyway. So good spot, Mike. Oh, it's nice, isn't it? One of the really nice things I like about this one here is, once again, we've just basically been doing nothing here since July, and now we're starting to break out. Very, very powerful. There's a lot of opportunities, guys. So much opportunities. And it's not just like, I've actually got on my watch list right now one individual stock, and it's a beautiful bearish trade, by the way. I've got these bullish trades going on. But there's also individual stocks that are giving me beautiful setups, which is the L-shaped trading pattern, moving average. Now all I'm looking for is a good breakout bar, especially this one particular stock I'm talking about. And all I'm looking for now is I'm looking for the large bar. When I get the large bar, there's a massive probability I'm going to make a nice profit out of it over the course of a couple of weeks to a month. And rinse, recycle, repeat. So there's many stocks out there that are setting up quite nicely. ASTS, what do you think, John? Let's go here. So the first thing is, first thing is, whenever I'm looking at a stock bullish, is I'm not going based off just an opinion. I'm always going to go through some sort of rules in my head. So I'm going to look at the trend of the markets. I'm going to look at the moving averages. I'm going to look at the different phases, the price and time phases, the energy phases, and then that's going to give me a clear picture of what's going on in the market. Okay. So no matter what I'm looking at, is I'm always going to be utilizing those three things: the trends, the moving averages, and the different energy building phases, or what's called price and time phases. Those three things is, I'm not going to come up with some sort of idea or an opinion. I'm going to let that tell me what's going on with that there. So even before I bring it up there, okay, ASTS. So let's go in here. So for ASTS, man, that was nice, wasn't it? Look at that there. So big picture ASTS, very beautiful upward trend here. So if I'm looking at the trend analysis here, this overall weekly chart, beautiful. Look at that. Look at that. Look at this here. What is that? That's a 1 year worth of sideways. The breakout, come down, retest, and then we had this very big move to the upside. Now we've come back down to here like this and come back down to there like that. So the trend is up and the moving average is going up. Yes. Now, when I'm looking at the different phases we're in right now, it's very, for a trading opportunity for me, too volatile, way too volatile for me. I'm not getting a clear picture here. Remember, like if there's volatility when you get into a trade, like look at this volatility here. This is crazy volatility. When you get into a volatile stock, expect a lot of volatility when you're in that trade. That's why for me, when I'm looking at the what's called the L-shaped trading pattern or the upside, is it goes up. It has just a bit of sideways pattern here for a while. It's pretty quiet, not much going on. And then it breaks out, it has a nice move there. But if we have now, if we then have a nice up phase from here, and then we do something like this here, and it breaks out, we could get something like the volatility before could actually continue. So this is always the hard thing. By trading this would be very, very difficult for me to trade. One, I'm not getting an L-shaped trading pattern, which is the number one trading pattern I use. So the trend and momentum on the big weekly chart is still very bullish. So it's probably going to still go up because I'm just going with the trend. Actually, I'm not even sure what this stock is. So that's the first one. And secondly, so that's it there. But from a trading purposes, I couldn't get into a trade here because it's way too volatile. And the reason why that's dangerous is because you could get a down bar like here to take you out, and it does that, and then I could do something like that, and like the volatility beforehand, when you get into it, if you get into it today, or this bar here, then you're going to expect that same volatility moving forward. And I don't like that myself. I like smooth price action. And therefore, that's where I like my best scenario is the moving average going up. The market goes up through here, and then it just goes quiet, right? Just goes quiet sideways, and then we get a nice breakout, and we go for another move to the upside. Nice, smooth, not big volatility. But when you start to get something like this going on, I don't like it. Volatility makes my heart jump. Well, yeah, well, I promise you right now, if you start to trade this stock here, it's been volatile for the last 2-3 months. So yeah, I couldn't trade it because it's just way too volatile for me. I don't like big volatility. Just give me a sec, guys. Yeah, so that definitely wouldn't be a trade for me there. And by the way, you guys that are thinking about Bitcoin, you do realize Bitcoin could be now forming a big major top here. So if you guys that are thinking that Bitcoin's going to bottom and go back up to all-time new highs, I wouldn't be too quite sure. Look what it just did. This complete long-term upward trend here that's been in place is over from there to there. So what could be forming here is, yes, we may get a drop down to here, but this whole, look at that major resistance level up there. If it rallies and it fails through there, we could be then starting to head back down here again. Because everything's starting to shift, right? We went from big, significant moves, higher lows, and then we failed, come back down here. So I personally am not buying Bitcoin because I just don't understand it from a long-term point of view. Just because everyone else says it's going to be good, I don't give a shit what else says. I need to understand it myself. I think there's much better buying opportunities out there. I'd rather do, which I have, put my money in TMF. That's going to give me a massive probability of doing 100% move over the next couple of years compared to making 100% move in Bitcoin. To make 100% move in Bitcoin, we would need to see this thing back up to about 200,000. So for me, from an investment point of view, we would need it. We would need to see this thing up to 180,000 for that to make 100% move. But where my TMF trade right now, right, all I need is a move up to 80, and that's made me 100%. So for me, for looking at a return on my investment on that there, TMF is going to win it the whole day or the whole time out there. And we do know we're going through a massive cutting cycle right now, and interest rates are going to come down, and they're going to be printing your money, and you guys get the point there, right? So there's a much more higher probability of the bond market starting to bottom out and start to go through an up cycle than Bitcoin going for a big move and making 100% move. So that's the reason why I've recently invested into TMF myself and not Bitcoin, because Bitcoin, it's just a big guess. Like, I don't know. Everyone says it's good. I don't know. Probably not. It's probably not going to be good. But when it comes to the bond market, I understand the cycles we're in, right? We're in a cutting cycle right now. They're going to start doing they're printing money now, and the interest rates are probably going to come down even more, right? Because we're in a down cycle right now with the interest rates. So it's just everything just in the cycle analysis from here. So I can understand why the bond market's probably going to rally over the next 1 to 2 years. And then it's going to be dead from there. So I can actually put together some common sense about the cycles that we're in with TMF. But with Bitcoin, I'm just like, not for me. Not for me. I want to put some, yeah. And by the way, guys, like I still don't get it. People still to this day about XRP. What is it with XRP? I see so much on YouTube, XRP, or people like XRP, and the adoption and this. I still don't get it. I just still don't get it. There's this fascination with this XRP, and it's like, it's a piece of poo. Um, Um, I watched INTC, Intel stock. If it breaks next week, could be a good opportunity. Let's go look at INTC. INTC. Yeah, again, not for me, Bo. Again, this is for me talking to me myself personally, not for me. Um, the big issue here is there's a lot of big issues here. I'm just not sure of the overall trend here at this time. Like, and the big issue is this. For me, anyway. Oh man, that whole area up through there, as you can see, is a major resistance level in the past. That's going to cause a lot of problems with this stock. Look at all this here. Since 2018, this whole area through here has been a major. So if we do break up, it may fail a lot through here. That's a real big issue for me. And as you probably can see, Bose, right? Like I'm pretty one of the things I've learned about me getting ahead in in trading is that I need to be picking good quality trades. Doesn't mean I'm going to make money every time, but I need to be picking really good quality trades. That means I'm going to be trading less, and I'm okay with that. I don't need to trade a lot to make a lot of money. But as soon as I start to get warning signs with a particular trade, the best trades for me is when there's no warning sign. Everything lines up. There's a real good trend. There's good momentum. There's a nice, good L-shaped trading pattern, like that sort of stuff for me. And there's no resistance there. So IYT is a good example of why I really like IYT. IYT is because what we've actually talked about here. You can see this resistance level here. And if we do start to break up, where's my thing? And yeah, that's the resistance level there where it is right now. If we just start to break up, then it's pretty free and clear. There's actually no resistance giving me potential hesitation through there. So I've just learned through my time that you're better off saying, well, actually, yeah, most of my trading is saying no to stuff. No, 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 no. Yes. No, 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 no. Yes. That's what it's like. So well, that's again, this is for me. This is the way that I personally trade. I've never made a lot of money. Actually, no. I always seem to on the back foot and losing money when there's a warning sign there to say this could be an issue with this trade, and I ignore that warning. It always is. Then that warning becomes a reality of me losing money in my trading account. And this is always the hardest thing, right? Like the way that I trade, there's actually not a lot of trades. Some months there's no trades, and then other months there's a lot of trades. But again, I don't need a lot of trades for me to make a lot of money this year. John, views on uranium. I've got some DNN options. DNN. What is that? DNN. Is that an actual stock or? sure if, let's go to uranium though. So uranium to me, I would say, yes, there's mines. Okay, let's go look at it. Very nice. I'm guessing call options. And what's your expiration on those call options? So what did you buy 1 year? What's your expiration month? So long dated. What's your expiration month? Six months from now. Yeah, that's not really long dated. Long dated are, well, it depends on what you look as long dated. Long dated for me, like for example, my TMF option position that I got going on, that's like 12 months. I think that's more like long dated. But I think this could be a really big winner for you, Sunshine. The reason why I say that is because it really hasn't done much since 2012 here. And we're just starting now, after all this time of breaking out and starting the move. And we can see here, we're just starting to break out here. We actually came, and the good thing about this here is it's confirmed that this is not a false breakout. Sometimes the market will break above these resistance levels here, and then it'll come back down, it'll hold, and it'll break back down here. So you're exactly right. So this breakout here, because of it had the resistance and now became support, and now it's continuing up, very, 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 very good bullish sign. Now, here's where it gets also good as well too. This is what's happening now. But when you look at this raw big picture here, this basing pattern, typically what happens when you get these basing patterns here is they typically have really, depending on the move here. I'm trying to make sure I say this so you understand this here. This is very similar to what I saw, Sunshine, and why I started investing into the GDXJ. I'll come back to that level there, but same thing here, right? This is the GDXJ here. And so I saw this doing this for all this time here. GDXJ. So, and it was actually more like that through there, really. That's what I saw. So one of the big things all through 2020, 2021, and 2022, Sunshine, I was buying the GDXJ. And the reason why was because I saw this being down at ultra low levels. 1, 2, we're probably going to go through another mining boom real soon over the next 5 or 10 years. And 3, we're at this basing pattern here. So it looks really similar to what you're talking about now with your stock here. Let me bring that up there. So it looks really similar. So I started buying it all through here, and I was underwater for so many years. I'm making a lot of money now, yes, but I was underwater for a few years. So typically what happens is with these, depending on if it's a good solid, the GDXJ is a solid, obviously, index. So I was really, really confident of seeing this very big move coming to the upside. I'm a long-term investor in this here because I see by early 2030s, we're going to be making all-time new highs because we're now in a new cycle, new boom. After 10 years of doing nothing, we're now in a new boom. That makes sense to me then, yeah. So but the thing is, Sunshine, I want you to think about this here, right? As you can, like, I try to put a lot of common sense behind my investments. Trading is different. It's pattern recognition, so on and so forth. But this is an investment opportunity, right? I knew back in 2020, 2021, 2022, and I stopped buying in 2023 on the GDXJ, right? As you know, Sunshine, you coming from Perth, the mining capital of Australia, right? Everything goes in cycles, right? We go through mining booms, mining bust. And I knew after doing this for about 10 years, I knew in the next 10 years, we're going to go through another mining boom. Make sense? It's just, we know that's going to happen. It's just the way the cycle works. So it was actually quite a common sense position for me to get involved with it. I just had to be patient and let the years unfold. And then when it does happen, which I happening now, I'm in it and I'm making money. Does it make sense? So it's actually, it's a very common sense point of view when you're looking, and that's what's made me a lot of money on the GDXJ. I just knew there's going to be another mining boom, meaning we're going to start to see another move back to the upside. So the purpose of me bringing this up to here with you is very similar things happen, right? We've had this 10 years of doing nothing, and now we've had this very big explosion to the upside. Big explosion. So back to your DNN. I'll bring this over here so you can see it. We can see what's going on here. And now we're just starting to break out. So here's the line in the sand. If we can really start to clear above these highs up here and get above $4, I believe we could do a 50% move. So around about this halfway, which is so a move from where we are now, a 100 to 150% move looks like it could be on the table. And that'll mean for your options, yeah, you'd pick up a really, I'm guessing 400% or 500%, maybe even 1,000% return. Yeah, and Sunshine, do you know the reason why they were cheap though? The reason why they're cheap is because it's a cheap stock, right? So a $2 stock, you're going to have very cheap options because it's relative to the actual stock price. That's why it was so cheap. Where if you look at this here, if you look at the GDXJ as an example, these ones here will be much more expensive because it's the actual the stock or that thing you're purchasing is at a lot higher price. So by default, the options are a lot more expensive the more the stock's worth from that there. So if you have a $2 one, you're going to get very, very, very cheap options. And this is where like trading the S&P 500 or the SPY. So the SPY right now, which is what I did, I actually bought options. The SPY is a $600, 600 call it a $680 stock. Very expensive options on the SPY because it's just so, yeah. What about some other cryptocurrencies? ADA. And SEI. These things look like a piece of crap. The comparison DNM would be for UEC, but that's for you, not here for the stream right now. I've had enough of your time. There's many opportunities out there, so much opportunity out there right now across all markets, so many opportunities. And that's all I'm looking for. I'm looking for those pockets of opportunities that's likely to do well. And that's where, Sunshine, now you understand by you seeing my live streams for the last couple of days, now you understand why I like the energy sector, right? It's basically the same thing. It's done nothing for 3 years. So when it starts to break out, just like the GDXJ, we're probably likely to start to see a really nice move. So that's why you see me looking at the monthly charts on the like XLE and XOM and stuff like that. It's all the same thing, really. It's all the same thing. I'm just looking for stocks that are really coming off a big energy phase, because it's the energy that makes the big moves come. And why I'm let's actually do this here. Let's have a little bit of fun here, eh? Let's actually see. I know. Let's actually see what's happening on the short. Oh, look at that. 5-minute chart. Sideways move. The sideways pattern is the number one pattern. And this is the thing about the sideways pattern, right? The sideways pattern is when most people get frustrated and annoyed and market's not doing anything right now. Or they start calling the top. But in the last 15, 20 minutes, Bitcoin's actually had quite a nice move. I'm not trading these charts, guys. I'm just looking at these things here. Ethereum, mate, as well. These are shorter term time frame charts as well. To have bloody expensive kids. I know. I get it. I've got 3 of them. Well, especially mine right now, Sunshine. Like, I've got 14-year-old. My daughter's 16. She's going on 17 next year. My oldest son, he's 17 going on 18 next year. It's like, what do you do for Christmas for him? Holes in the ground. I'm in DVN. Let's go have a look at DVN. Let's go have a look at DVN here. DVN. I'm guessing that's the stock. Is it this one here? 50? You're in this one? Shares, yep. Yeah, I don't know. I'm saying I don't know because I'm firstly looking at the trend, right? Every time I'm looking at the market, I'm looking at the overall trend first. I'm just not sure. Is this going to be the bottom here or not? Like, okay, so the big issue now, I'm looking at this big picture here, is this. From a buying point of view, this whole area through here is going to be so that $50, I would say, is a real big issue for this one. Yeah. So we may rise, but that's a real big issue there. And again, I'm not sure what the trend here is. I'm not sure if we're still continuing this downtrend here or if it's a change in trend. Because if I'm focusing on the trend alone, say down, up, down, up, down, up, down. Like this could just be an up from here, and then it may roll over again. I don't know. That's just me guessing, by the way. So yeah, we haven't actually started to form like a significant bottom yet here to say we're starting to see this upward move. So it may, that's always the hard thing, right? It's always the risky thing from there. Always the risky thing. It's uranium. Oil. Let's go have a look at oil here. Yeah, oil is okay. Yeah, that'll be the point from there to there. As long as we stay below this trend line, we're definitely in a complete downward trend here. I'd have to use that level from there to there. You're hoping crude will go up when futures open. This thing is just, as you can see, right? Every time it does try to go up, it's down, 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 down. So I'm gonna tell you something right now, Sunshine, that you're probably not gonna like. But again, I'm always looking at the trend of any particular market here. When a market does this here, right? So when a market does, it'll come down for a bit, down, it'll find support, and it'll break down and come back down to here. If we get something like this, we get something like that there, breaking that there. So we come down, find support, and we come down and we rally back up, and then we hold and then we come back down again. If we get that, that's telling you that there's probably another leg coming to the downside here. The reason why I say that is, again, I'm looking at the being long oil right now, very risky. Very risky. Picking a bottom now, not for me. No, definitely not. I'm not sure. Being long this market now is very risky because the whole thing has been down this whole time. Now, the purpose of me saying what I was saying through there is this, is that if we look at oil from here, I'm just trying to, okay, so we have this pattern through here. So that's that pattern through there. You can see it actually rallied up through here. You definitely have that level through there. So what may happen, yeah, it's so risky, isn't it? If we got something like this going on from there to there, like if that came with crude down, yeah, we may end up in the 50s, maybe the low 40s through there. Like that, there may be one, because we haven't got capitulation yet. So then typically what happens when you get these markets that turn around, we actually do find a bottom, we get a bit of a capitulation and then it reverses really quickly. So for example, the Aussie dollar did this here. I was watching this for an actual trade on the Aussie dollar, because the Aussie dollar did this exact same thing. You'll see it through here, right? So you can see here that the Aussie dollar had support. It had this big flush down, a capitulation, and a reverse right back up again. And I was actually looking to take a long signal on the Aussie dollar on this here. And the same thing here. This is the daily charts, and this is what the daily chart looks like. So you typically get the last little push. If it's going to be what you'll want to see this thing potentially start to completely have a bottom here, is a capitulation like the Aussie dollar. Again, I'm thinking about the Aussie dollar because it's the pattern that typically what happens at the end of moves. You have this down move, down move, down move. You get a capitulation breaking past support, and then it reverses really quickly. This is typically the bottom before we start to see the overall pattern through here. And again, I'm thinking about the Aussie dollar because this is the one I was been watching this here for a long time, obviously. And even back through here on this weekly chart over here. And then when I saw this capitulation move come through there to there, then I knew then there's a high probability now that we've formed the bottom, and we're probably going to start to make our way back up here again. So looking at oil, if we use the same situation for oil, and we actually just use it right now, yeah, maybe the $50 level there. Yeah, that actually makes sense, okay? So if we're going to find some sort of significant bottom in oil, what we will see is basically the same thing here. So that's that bottom through there. We may even have a bit of support down there somewhere, but looking at the recent support levels there, what we will see is the same thing. We'll get a capitulation. Now, if this is going to finally bottom, we'll get a capitulation come down like that there, and then very quickly it'll come right back up again. It'll hold, and then it'll break through there, and then we'll start to see oil go back up again. It doesn't have to do that, but the capitulation typically that's the end of that phase. And I even saw this on Meta as well too. So if I go to Meta, and I remember looking at watching this and seeing what was happening around the Meta at this time. If I go to Meta here, before Meta started to have this big move. Let's go to the weekly chart here, right? So forget the trend lines and everything I've got there right now. But look at this here. Look what Meta did. So that was the support level there. Major support level here. And so Meta came down and had this big capitulation move. Now this big capitulation move on the daily charts was this here. It was down, 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 down. It had a big gap down from earnings. And then the news was, this is so bad. It's terrible. Oh my goodness. It's like they've lost $1 billion on the metaverse and all this sort of stuff, right? All this sort of stuff that was going on. And then what ended up happening is I was watching this and then it completely turned around really quickly, as you saw, really, really quickly. And when that happened, I knew there's a high probability we're now likely to be starting. And I didn't know it was going to have a big move like that. But as you can see, the capitulation here and right here, that was, again, you can never predict how strong it's going to be. Like this is a very strong bull market. I could never predict that. But if this is going to start to see a turnaround, you typically get the capitulation phases. And these are the two really big examples that normally end. You can see this, the market's going down and you get these capitulation phases and then it turns around. They're typically bottoms before we see a complete reversal. And we see it here and here before that goes up. Aussie dollar is another, as I said before, Aussie dollar. So I keep an eye on all these markets all the time, as you can see, guys. And there's different patterns here that typically give us a sign of, oh, okay, we've been going down for many years. Now we're getting a capitulation and it's reversing really quickly through here. This could be a very significant bottom. And by the way, that gives you a really good risk to reward ratio, right? Because if you enter here, that's your risk. And then you could actually end up buying it and holding it all through there. And then, even if you're holding it through here, that's your reward and that's your risk. So it's a pretty awesome risk to reward ratio. So there's these opportunities through there. And that's what I found to see final bottoms come in the markets there. And even when we're talking about the oil market, by the way, like I even saw this with the oil market. Like we're talking about capitulation. Like look at this here. So this here was the major support level all through here, right? Look at this here. I was fairly confident that this is when the whole COVID thing happened and then the oil and so on and so forth. I was really confident that this big flush down here was actually a bottom in oil and it was a great buying opportunity. Great buying opportunity. Why? Because look at this back here, right? We had these are weekly charts here. Major weekly support, major weekly support. It flushed down and it came right back up again really quickly. Whenever you get this pattern here, again, this actually happened in COVID. And this is when you probably heard COVID with the whole oil went negative and negative oil and that sort of stuff, right? So these situations, whenever you hear bad news about these and you get these big capitulations, like what happened with Meta, the news was, one, stocked Meta being crushed at the time, and two, Meta had lost a lot of money at the time. So now what made this even better, like, wow, this is just a screaming buy for me anyway, was not only did it break back up, but look what ended up happening. It actually broke up, came down, found support, and continued back up again. So it actually found support at that level now. And then we saw this very big move. It was such a beautiful buying opportunity back there in 2020. Like it was a screaming buy. And then you start to look at is that sync and layout? Oh, go back. Oh, what am I doing? Oh, there it is there. So that there. So when I was actually watching this here, firstly, the first thing was what? Big flush down and a really quick reversal coming right back up again. That's a very strong signal of a bottom. And then what made this just absolutely just BEA beautiful. Like this was a screaming buy for me. Just like, here we go. It actually came up. It gave me what? It came up. It gave me my energy building phase there for all that time, which was, that was about, what was that? Started in June, July, August, September, October. So about 4 or 5 months. And then with a beautiful energy building phase at this level of support with the flush down. And then we broke it. Oh my goodness, beautiful. So, and then it just, yeah, it was just a, man, made a lot of money on that there. Beautiful, just made so much money. So these are the opportunities I'm also looking for as well too. So in my 1% group that I have, again, it's not open, so I can't offer it to you guys. But in the 1% group, I have my trading setups, which are 3 main trading setups. But then also there's these situation trades that I get involved with as well too. And like this here, these are what's called situational trades. And that's probably about 20% of my trading. And then the 80% are more like systems, patterns, and so on and so forth from there. So right now, if we did start to get what we're talking about here, what would be perfect? Like, oh my goodness, oil's about to make a really big move. Let's go long. If we got the move down and it came right back up and then it just held here for a bit and then we broke out like that. Oh, oh, beautiful. And so there's all these markets out there. Again, like I have, most of my trading is based off 3 main trading patterns that I use. And then the other 20% is these situational trades like I see here. So TMF is a situational trade for me because we know interest rate's going to come down. We just don't know when and how. That's why I'm in it. Buy it. And then over the next 1 to 2 years, we're going to get the rates coming down. We're going to go through a recession. We know that's coming. It's not like if, it's just when. And when it does, I'm going to make a lot of money. Now just need to sit and be patient. And this is even just buying TMF, which I did. I bought it for just buying it. And I also have options that expire next year. Like literally, I think it's like January 2027. So I have 1 year worth of options as well too. And the reason why I did that, because I'm really confident what's likely to happen. I just don't know how it's going to happen. Is it going to bottom here and so on and so forth? So, and the interesting thing is Sunshine as well too, Sunshine Girl. The interesting thing is that if we did get something like this with oil to show us a bottom, that would also be perfectly in line with possibly the energy sector kicking into play. And then maybe we start to see a rise in oil and then the energy sector breaks out at the exact same time. And then, which is exactly what I see, by the way. I see next year the hot topics is not going to be Bitcoin, gold, silver, and mining stocks. That's not going to be the hot topic this year. The hot topic is going to be rates down, bonds up, and probably one of the big topics is going to be oil and energy is starting to really pick up. And this is where, like, I'm always looking for where's that next shoe to drop? Where's that next market to drop? And I want to get involved with that. So, for example, and that's just looking at the patterns, oil and so on and so forth. So that actually sort of makes sense from that there. Just give me a sec, guys. Thank you, Sunshine, for like talking about oil as well too, because it made me go down a rabbit hole of all that information that I just provided on the live stream today about like if it is going to bottom, what does a bottom look like? So then and then it allowed me to bring up examples that I already have in the back of my mind about what bottoms look like and so on and so forth. And so it was a really good sort of teaching lesson there. So thank you for that. Because I've always said to myself, like, if something's going to bottom, what is the characteristics of a bottom in a market that I can actually see where it's likely to be a bottom? Sometimes we don't get the signal, but if there's going to be a common signal around the bottoming happening, then what do I need to look for to tell me that that's going to happen if I'm going to start to look to get involved with the market? So, and as I've gone through my years, I've kept them in the bank of these things when they bottomed. It was Meta. And as I said before, the big one that I've been watching even just recently was, and you can see I've already drawn it up, but this is the Aussie dollar because it gave me that pattern there. And Aussie dollar's been getting crushed this entire time. And then even just recently, since 2020, we came down here, found support, and we had this big flush down, and then now it's picking back up again. So I watch all markets, by the way, guys, as you can tell, right? Like I'm always watching. I'm not a one market trader. I'm not a crypto trader. I'm an all market trader. Last year I had a trade on Ethereum, Platinum, all that sort of stuff there. And the interesting thing is, as you can see, even back through here. So if I actually clone this and go back to the actual last time we had this, you can see there's things called V bottoms, right? V bottoms. So down, 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 a violent flush down, and then it came back up, and then that's when we started to pick back up to a bit of an upward trend here. And this is where, when you start to see this happening, the hard thing about that though is this. The hard thing about that though is when this is happening though, the current environment is big crash, fear, doubt, it's going lower, it's the end of the, like, that's the narrative and the psychology and what the media is talking about at the time, because they're talking about what's happening at the time. It makes it that much harder to buy the market. Thrifty. Very nice. I can just... Oh, actually, I may have to take that back. Yeah, longs for me, no. It doesn't meet my rules. I need a sideways with a strong moving average. I have a sideways, yes, but not a strong moving average. So therefore, it's a no for me. Nice setup, yes. And I can see what you're looking at there. But for me, to give me that high probability that we're going to see another move, I need that moving average coming right behind it. But the moving averages are flat, so both moving averages. I was thinking like the moving average was going to be strong, but look at it all flat through here. So with 100 weekly moving average. Well, it's I just stick to the same thing, 50, you know, like if you're going to use the 100, then use the 100. For me anyway, I just like to stick to what I use all the time, which is 24 on the weekly. Because the 24 on the weekly, that would give you how many? 24 weeks is 4, 8, 12, 16. What's that? Roughly 6 months of momentum there. Because the moving average is like a momentum indicator. And that's why I'm very bullish on the indices right now. Because if I go back to the stock market now, let's go right back around to the stocky market. And we see what's happening with the stocky market, and we go to the weekly charts, you'll be able to see that we are very strong on the moving average. So you see the moving average coming up very strongly after breaking out level 3 here. That's one of the reasons why I'm actually very bullish. Same for NASDAQ, same for the Dow Jones, and even same for the Russell as well too. Moving average coming right back up behind it. Now, if we start to flatten out here, that's going to be a warning sign that maybe we're not going to make the move. So, yeah. King Russell. That's right, King Russell. King Russell, baby. Yeah. But it's all the same thing. Sunshine Girl, I'm not sure if you're still around, but it's all the same thing, right? Whatever's the markets that haven't done much for the last few years, when they break out, they typically start big moves. It's really as simple as that. Look what gold did. Gold did nothing for 3 years, broke out, big move. Mining sector, GDXJ, did nothing for 10 years, but when it did start to break out, now we get big moves. Russell, nothing for all this time, breaks out, big move. So it's actually quite a simple process, right? It's like silver is dead. TT3, no, silver not dead yet. Not yet. Short term is a top, yes. Short term top, not. I still think there's actually one more leg coming to the upside. I think we still have one more push. So looking at silver is I see probably just going through another one of these phases. So I've got the moving average coming up here. We may get a bit of a drop here, but as long as we do something like this and just hold and we don't get too sharp of a drop, it comes up and does something like that. We get something like that, we're probably gonna break and go towards 100. TT3, do you see how it's really the same type of trading pattern that I'm looking at? We went up, we went sideways, strong moving average. When we got this, we'll probably have another move. We did. If we get the same thing, we'll probably get another move. You see how simple it can be? So if I do get the sideways over the next couple of weeks to a month, then I'm getting ready for myself for another good trading opportunity. Rinse, recycle, repeat. It's all the same thing. And the beauty thing here, I have nothing to do with macroeconomics and the stochastics and the MACDs and it's one moving average and a simple pattern. And guess what? This here is more higher probability than any macroeconomics, stochastics, MACDs, and all Elliott waves. More high probability there's one simple trading pattern than any of those combined. I guarantee you that. And it's so simple. One moving average. I'm just looking for the market to go sideways. Could be volatile, but it could be like I'm just looking for a sideways period to a strong moving average, either up or down. And when we do get that, there's a high probability of seeing another move to the upside. And within that comes a beautiful trading opportunity. Get in, hold it for a few weeks, a couple of months, beautiful swing trade. Overlay things with options, start to pick up a good 2, 3, 400% return. Be in it for a couple of months, take a really big profit, and go do it again. Unfortunately, people are like, so one trade in a month, that's it. I'm looking for more. And then they want more because they think more trades equals more income. No, you want to get into a trade, want to get into one trade and make a big profit off that one trade. No, let me take 20 trades today. And then you blow yourself out of the market. What about AMD? Let's go look at AMD. Jeez. Man. It's so volatile, this stock. That's the first thing that comes to my mind. It's like, for me anyway, for the way that I trade, I wouldn't get involved with this here. It's not giving me a smooth pattern at all. Big gap up, and then it gapped up and it completely came down, and not for me anyway. But it's so volatile. We're not getting any good trending. We've got this down phase and an up phase and a down phase and an up phase. Yeah, not for me. Man, Barrick had such a beautiful, beautiful pattern, didn't it? Barrick Gold. Lots of things going on. Alrighty, guys, that's it for me today. I'm done and dusted. Have a good day, everybody. And I'll catch you guys real soon. See you, traders.